right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. We do have to get busy this morning because it's a busy day. I mean, we got to get through all the majors. It's probably going to take us through the next half an hour, 45 minutes. I'm going to try to answer a few questions, and then non-farm payroll happens. And then depending on how big of a, a beat or a miss will depend on if I'm able to answer any more questions or not, and the price action to follow. So this is one of those days, kind of like Wednesday. If I don't get an opportunity to answer your questions, then you know what I need to do. Here, I need to tweet out my link. Sorry guys, just give me a second to do this. I try to do this on non-farm payroll days because you notice there's a couple people that try to do live non-farm payroll webinars. Uh, that try to do it, and you notice no one really does it for an extended period of time. Do you know why? Because people get caught on the wrong side of the market too often, and so they decide, instead of, for the sake of looking like an idiot, I'm not going to do live analysis anymore. I've been doing live analysis for non-farm payroll for probably, out of the last 13 years, probably the last 12 or 11 years on non-farm payroll days through the non-farm payroll. So give me a second, guys. Okay. I just need to make sure I get that link out. All right, so let's start. Let's get this party started. So let's go to the euro dollar. Okay, here's the euro, and thank you, Joe. Thank you, Marie. Appreciate it. All right, so here's the euro dollar. And thanks, Polly. Yeah, like I said, a lot of people, they try to do live analysis of non-farm payrolls, and they do it for like once or twice. Then they end up being on the wrong side. They're like, well, and it's stupid. I think it's silly to sit here and to be really biased anyway. You go, well, I'm expecting a strong number, and the dollar is going to rip higher, and blah blah, and then they get run over. Their analysis is completely wrong. Listen, I don't know what's going to happen, but what we do is we prepare for either situation. So I don't care if the dollar strengthens. I don't care if it weakens. Well, actually, I do care if it strengthens today. Okay. So anyway, I rather than try to figure out, and be directional, all I want to do is figure out, what are going to be the best opportunities to trade. Should we have a strong number? Should we have a weak number? Because I don't know about you all. I'm not good enough to foresee the future. Some of you might have a better skill set than myself. all we can do as traders, we can prepare for either situation. If the dollar's strong or if the dollar's weak, how are we gonna react? Like for example, I look at the euro dollar and knowing that what we drew out yesterday is probably what's playing out right now, is that we have this triangle pattern. Okay, here's the euro. We have this triangle pattern that's formed. And frankly, if we have a weak number, upside's probably fairly limited here. You know, if we have a weak number and we rally to 113 and a quarter, I would probably look to fade the euro up there, right? This is just we drew this out from yesterday. It's like, okay, um, we get up to 113 and change. It's probably going to be a good short. There's more opportunity in the euro to the downside. That means if the number is stronger, we're probably going to have a lot more opportunity to, short the euro, plows through support, and then, we can take it lower towards 110. That to me is a better setup. So anyway, uh, so let's look. So looking at the euro dollar support, it's going to be right through here. Okay. And by the way, we're gonna verify this number. Okay. Obviously, this is critical. You can see this, and let me remove that because the 786 is important. It was important on the way up, but check this out. So you'll notice that right here, based on our reaction overnight, okay, you can see how important this 112 area is. Now let's confirm that with a fib from low to high. You can see the 38% retracement resides just below at 111.66. So this is 111.80, 111.66. I'm going to say 111.70, really important support today. Okay, so if we break below 111.70, it's going to open up the downside, 1.1170. Okay, that's probably going to be pretty important support for the euro. And like I said, personally, I'd like to see a strong number because not just because I'm short the Kiwi. I'd like to see a strong number because if we get a strong number, we have some nice downside here. Remember, the euro run-up has been predicated on, in my opinion, that Greece is going to get something done this week. We've now pushed that off until the end of the month, and now give me a reason to buy the euro. I really can't come up with one. So the better trade for me is going to be to short the euro dollar, but I need a strong number. We post a number at 240, 245 or greater, and let's just make the assumption that the unemployment rate stays the same. The euro is probably going to come back under pressure, and we're probably going to hit new lows of the day and open up the downside again. Okay. Now, if we have a weak number, we come in 200,000, 210, maybe sub 200,000, we'll probably rally back up towards this trendline resistance. Now, if you look at the daily chart, okay, keep in mind what we're doing here is we've got a symmetrical triangle building consolidation. I drew this red line out here yesterday. Sorry, I'm going to put my coffee down. I drew this red line here yesterday because we hadn't Greece hadn't decided to push the payment off until the end of the month. We were thinking, well, they're going to make their IMF payment, so if we challenge resistance, that's going to be extremely bullish the euro. But we didn't. We posted a shooting star. So the downside today should extend based on yesterday's chart candle. That's not saying it we guaranteed that, but obviously that's key resistance moving forward to 114. So today, see if we can get a bounce back today, like towards 113, maybe 113, I don't know, 1310, 11320, 11303. Wait, hold on. Let me make sure that number is correct. It's not. Okay, 113 is the 618. If we get a bounce back to 113, that's probably not a, that's going to be probably pretty formidable resistance. So 113 should be resistance. And right now we're in a neutral bias. We're in a range environment, and you can see big consolidation there. All right. Let's go to the cable. Yeah, I gotta get moving, guys. I realized how behind I am on my analysis this morning. Okay, so here's the cable. I'm surprised the cable is under as much pressure as it is. Okay, I am, and just so we're all aware of the analysis we've done the last couple of days, that resistance has been, we tagged it and reversed. It was huge resistance at 154.30. Now the problem that you have with the cable now, let me get rid of this stuff. Problem that you have with the cable now is the pound is trading a little heavier than I think most people expected. I personally, I didn't think that the cable would come down here. I'm surprised that the pound is as heavy as it is for no reason. Okay, um, and let's get rid of that. So we're stalling at a 50% retracement, but really 618, and you can see right through here, spike high, lows, the bodies all hold above it. That all comes in at the 618 retracement. That comes in at 152, let's just say roughly 152.70. That will be support today. 152.70 will provide support. Now, I'm assuming there's traders that are stuck along the cable. You know, if you go back over here, you go, wow, look at this huge breakout. We're breaking out. Everybody's getting long, right? Big green bars. Traders are chasing it. Why do traders chase? They do. Oh my God, it's ripping. I'm getting long. You know, so they're chasing into that resistance that we've seen as resistance all week. But you're going to get people chasing it. You know, they're long. They're stuck long now. And like me, I woke up this morning. I'm like, why the hell is the cable so weak? Didn't you say that? I did. When I woke up, I'm like, why is the pound so weak? Well, it is. So now that if you're long and you're stuck long up here, you'd be happy with a bounce because you want to get out of that long position. So I think any move back up to 154 and you're going to see some selling because now there's traders stuck long and they're going, why are we down today? There's no reason. There's no economic data that's driving down the pound right now. So if it's down, you know, they're going to be happy just to get a recovery back to 154, just so they can get out. All right, let's go over to the Swissy. So the dollar Swiss, okay, the dollar Swiss down channel support has held. Here, let me get rid of that really quick. Let's get rid of that. This down channel and the support has held pretty well. Now we have a month now or several weeks that we can play the Swissy back to the upside. Why do I say that? Because Greece is not fixed necessarily, but Greece, the news out of Greece might be out of the picture for a while. So you got to watch the Swissy. If the dollar strengthens, the Swissy might be a good trade back to the upside for the next week or two. Like I said, until I think it's a little dangerous to play personally still, but as long as we don't get any Greece or any news that Greece is, gonna actually just default and not pay at the end of the month, then you can probably trade the Swissy. All right, if we get any news that Greece isn't going to be able to make payment at the end of the month, the Swiss franc's going to strengthen, and the dollar Swiss, euro Swiss, anything that's Swiss is going to go down. So for right now we have resistance here at 93.70. That should unlock some upside. Okay, it's 93.70. And support obviously is right here at 92.75. Okay. All right, let's go to the dollar yen. So the dollar yen, it's holding up very well. A lot of people have been fading the dollar yen strength recently. And you know what the dollar yen hasn't been doing is it hasn't been going down. And what's so surprising about this move to me, and like I said this morning, what got me is you got equities that are weak. Well, that were weak. We're bouncing now. Equities were down. Futures were down 50, and the yen, the dollar yen was up 50 pips, very strong. So what that means is if we have a good number today, this dollar yen is going to take stops above 125. And I am still looking for 120. I deleted everything. I deleted everything for a reason yesterday. Was it yesterday or the day before? But I'll redraw what I'm talking about here. 125.80. If we make it up there in the next couple of sessions, I'm a seller. Okay. This is the range that we were in basically all of 2015. The breakout 161% extension comes in at 125. It's basically 125.70-ish. So you got to watch the dollar yen. I mean, it's not it's not backing off. So we break above 125 and it's bullish. Support right now is 124 on a weak number. Okay. Like I said, there's a lot of people out there fading the dollar yen right now. Let's talk about the Canadian. And just so you all know, I'm short the euro yen, so I'm in my own right fading the dollar yen. I'm buying yen right now, which it's scary when you look at the dollar yen as strong as it is. It's a scary proposition. Okay, so here's the dollar Canadian. Here's another currency that everybody is shorting. Here's the daily chart. This is why you have to be really careful with that. Okay, let's go into a 4 hours, probably better seen. Okay, so here's a 4 hour chart. Look at this move and look at this support. Okay, that's that's just a little over a 24% retracement. If we end up getting a um, if we end up rallying here, that's a very shallow 24% retracement. It's hard to be bearish the dollar Canadian that's not backing off. Like I was telling you guys yesterday, I was talking to a European the other day who's like the dollar Canadian turned bearish on Wednesday, and based on our chart, in our channel, we popped out of the channel Wednesday, but look, we're not even backing off. So, and we do have Canadian jobs report today too, so if Canada should come in weaker, which, as you guys know, the Canadian economy is teetering at this moment. If the Canadian, I think out of Canada we're expecting 10,000 jobs. If if Canada loses jobs or comes in, more of a flat number, this dollar Canadian could rip higher. Okay, uh, so resistance going to be really important above today's highs, which is 125.30. And by the way, because it's not backing away, this is still a very bullish trend. Where's support? Support's not too far away, by the way, which will turn the Canadian lower. So support will be back below 124. Let's just call it 124.70. All right. Let's do the Kiwi, and then we're going to take our next break. And then we'll come back and finish with the Aussie, the dollar index. We'll see if we can do the peso, because the peso is still real close to breaking out. All right, here's the Kiwi. Kiwi's still in a triangle pattern. In Asia, we couldn't break down. See, it's just like this. Oops, didn't mean to do that. Okay. So we're in the apex here. So the Kiwi's going to break out. I'm assuming the Kiwi's going to break out today too. So 71, let's just call it 71. And then really we'd have to have a breakout above 71.60 right there. And so those are your breakout points, 71 to 71.60. 0.71. And that's important support. 71.60. And don't you have to realize also, okay, here's the Kiwi. All that resistance held. We're below support right now. So as long as we remain below 72 cents, it's still bearish. Okay. It hasn't fallen, but one of the reasons why the Kiwi hasn't fallen is because the euro's been so bullish. If the euro turns lower towards 108, this Kiwi is going to be down at 69 cents. All right. So, all we're doing is we're consolidating, even as the euro is rallying. So even as the dollar's been pulling back, it's nothing here. So that keeps it still bearish for now. All right, we have to get back above 72 cents for it to become neutralized. All right, I'll be back in a few moments. When I come back, we're going to do the Aussie, dollar index, peso, everything else. So I'll be back. Don't go anywhere. Thanks, everybody, for being here. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Let's really quick, let's finish up with the Aussie and the dollar index and go through just some of the other, we'll look at the Nordic currencies too, because the Norwegian krona is up huge today after the industrial production miss. All right, so here's the Aussie. Now, stop here for a second and take a bigger look at everything. So remember the Aussie when we were trading up towards 81, 82 cents. This is a megaphone pattern. We're kind of in the middle of the megaphone pattern right now. Obviously, the downside had been stalled, following like the RBA decision, and following the RBA decision when the RBA kind of removed its dovish bias, that created that big green bar there. But because of the trade balance numbers and the retail sales numbers this week, it pushed us lower again. Basically, what's happening with the Aussie now is we're just kind of stuck. So let me remove. We're just kind of stuck in this, like no man's land, if you will, in the Aussie dollar. But we still have this megaphone pattern that should be respected. And for the most part, let's just go like this, roughly. Okay. Yeah, it's probably a little bit less exaggerated, maybe something more like that. Okay, so we have this, megaphone pattern. Obviously, what we've done right now is we've fortified some support down here, and that's going to be obviously important support moving forward. So we stalled at the 618 post RBA this week. Okay. Trade balance, retail sales, 618 is holding. So right now you can see that very important support for the Aussie dollar, without a doubt, is right here. Very important. I have the Aussie New Zealand long, but I don't have any Aussie dollar exposure at this point. Okay. So 76.65, really critical support, no matter how you slice it. 76.65, really, really important support, no matter how you slice it. Okay, let's go over to the resistance. So anybody who's stuck on the long side of the Aussie is probably going to be pretty happy if we get back up here previous support, current resistance, current resistance. That all comes in right around 77.50, 77.55 ish. So I'll just put in 77.55 ish, and we are range bound. Okay, let's go to the dollar index. So here's the dollar index. Yesterday we held support like it was no one's business, obviously. Now, as far as I'm concerned, the dollar index is very much in a range here. $95.80, $94.85, $94.85, $95.80 range. You can see it right here. Now, I guess what we should do is we take a little bit longer term outlook on the dollar. Okay, so whoops. So as you can see, the dollar basically stalled at the 618 retracement. That's why, you know, off this rally we stalled at the 618. We're having a hard time, you know, getting a further rally from here, but really just kind of consolidating, trying to figure out what our next move is on the dollar. Like I said, it probably has more to do with today's data. I mean, if we get strong data today, you know, we get some. Here, let me grab a pen. We get strong data today. We're going back up here. If the data is weak, we'll probably come down here, and you know, if we breach this support, then you know, we're going to go retest, you know, these lows. So that probably has more to do with, you know, today's data. We're being here, you know, either we're going to squeeze back up towards resistance or down towards support, and that'll be determined following today's data more than likely. Okay. All right. Let's go over to. I have to show the peso. The peso is really close to breaking out yesterday, and it's still not that far away from today. So here's the U.S. dollar Mexican peso. I mean, look at it. Again, I have to reference that the euro dollar just got finished staging a really nice rally over the last couple of days. Okay, see it right through here. That ushered in dollar weakness. That's the euro, is the yellow. Okay, so we had this euro dollar rally from 109 to 114 or whatever it was. Look at what the dollar peso did throughout that entire euro rally. Now, what should have happened is when the euro is going up, the peso should have rolled over, but it hasn't. So what's going to happen here is if the euro dollar decides it wants to go down following, let's say it's a strong you know, non-farm payroll, let's just say it is, this peso could very easily break out pretty aggressively to the upside into multi-year highs. Because remember, we're really close to multi-year highs here. Okay, 15, just as we wrote down yesterday, 1560 major resistance for the peso. And I can't even trade this stupid thing, but for those of you that can, you have to be on the look for an upside breakout. 1560 major resistance. But we're in a range, but we're close to breaking out. Support, well, to keep it bullish as long as we are above. Actually, I should probably change that. As long as we're above 1548. Let me change this. But we're just remember, we're bullish, but we haven't broken out. We're just really close. The breakout point's 1516 or 1516. If that goes, then this peso is going to rip. Look at the Norwegian krona today. We were talking about the potential of a head and shoulder pattern. Here's an uptrend. Head, shoulder, shoulder. Never broke the neckline. That's the danger of of trading too early on a head and shoulder pattern. When you don't break the neckline, the risk is it comes whipping up through the shoulder. So we're actually close to breaking out here to the upside here on the Norwegian krona. All right. Um, let's take a look at the Swedish krona. Choppy. All right. This is your bias chart. Oh, you know what? We have to do this too, because Sanjeev in our chat room, he requests that we write this down, and I have to agree. How important is today's lows in the S&P? Let's delete this red line for a second, and let's zoom out. Okay. Low to high. Really, really important support through here for the S&P. Let's call it 2090. ES, SPX. Support 2090. Very important support. That's why I put the asterisk there, because it's highlighted as extremely important. If we break, the S&P can break back above 2103. That'll turn us back into the range. 2103. That'll put us back in the range. But right now we are in the range environment, but we are very, 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 very close to shifting from bullish to bearish, or from range bias to bearish. Very close. Okay. Because we're in the apex, man. You know, the apex is threatening threatening break. When it breaks, it should be a pretty good one too. When or if. I mean, we will break eventually. All right. Wow. Ferris Bueller's Day Off is 30 years old, the movie. 30 years old. Can you believe that? Ferris Bueller today? That makes me fairly old. Considering I was a teenager when I watched that. Okay. Daryl says, was not even born then? You weren't even born then? My God. You're a youngin. All right, let me take some questions here. And by the way, we here, just this is your bias chart. We're 15 minutes out from non-farm payroll, guys. Here's your bias chart so you guys have it. Let's go into your questions.